Yeah, we don't think the numbers are good. Their revenue number missed consensus, 13.7 versus 13.9, and the whisper on the bottom line was $2. They came in below that. So I don't know what everybody's talking about. We think there's a margin problem going forward. We don't think they're Amazon. We think they're AOL. You look at what's going on, right? You got to stop looking at percentages and look at actual unit growth.
It's the Muppet Show with our very special guest star, Mr.
With Gordon Johnson, CEO and founder of GLJ Research.
Well, you heard it, folks. Welcome back to another episode of The Muppet Show, starring Gordon the Class Clown Johnson. In today's episode, Gordon Johnson will be explaining why the Earth is flat, God exists, and Tesla's Q3 earnings were terribly disappointing. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. So before we get too carried away with today's videos, let's look at the response from Wall Street and the stock market after Tesla's disappointing Q3 earnings. Over on Twitter, great thread here from Gary Black. If you guys and girls aren't following Gary Black, what are you doing with your life? Seriously, by the way, everyone go follow him now. In the wake of Tesla's earnings, the following day, some analysts upgrading Tesla stock with buy ratings and raising their price targets. Wedbush increased their price target on Tesla stock to $1,100 per share, up from $1,000. Canaccord, $1,040 per share, up from $940. Deutsche Bank, $1,000 per share for Tesla stock, up from $900 per share for Tesla stock. Bank of America, now a $1,000 price target on Tesla stock, up from $900. Another one at $950, another at $905, another at $888, another at $860, all increasing price targets with buy ratings. Then we have a few more as well, analysts raising price targets without necessarily having a buy rating. Credit Suisse updating their Tesla stock price target as well, RBC, Cowen, and JP Moron. And I just want to emphasize the word moron. $250 price target, up from $215. And then of course, Tesla stock itself, up 3.26%. $28 for the day following earnings. Now, for those of you that haven't been paying attention or aren't super familiar, typically speaking, what tends to happen in the lead up to Tesla earnings, a lot of people and funds buying up Tesla stock, buy the rumor, sell the news, and then usually Tesla stock selling off down a couple of percent in the days following earnings. Well, Tesla stock was down in pre-market, but this was such a strong quarter that Tesla stock bucked the trend, closing at an all-time high of $894 per share. Now, you know, for some strange reason, I just can't put my finger on it. I almost feel like somebody predicted this, suggested that Tesla stock may be breaking through all-time highs following Tesla's amazing Q3 results. I must be hallucinating. I just feel like I heard that somewhere. Wait, I just remembered what it was. It was this. I walked past a mirror a few days ago and saw the reflection of my shirt. Glad I figured that out. It would have been bothering me for days. By the way, if you don't have your own Tesla stock to Mars merch, shirts, mugs, hoodies, etc., there's a link in the description. Check them out. And by the way, just quickly, a massive shout out and a thank you to everybody for supporting the channel and picking up some merch on the store. I also love getting DMs with you guys out and about wearing this merch, drinking from the mugs, etc. So always feel free to send those through. And if anyone's curious, 561 units of this design, Tesla stock to Mars, have been sold since they went live. Crazy.
Let's talk Tesla, the car company, not the 80s heavy metal band. But it was a pretty rockin' quarter for Tesla. Record sales, gross margins up above 30%, and the company making changes to its battery technology. Let's talk about it all with Gordon Johnson, CEO and founder of GLJ Research, and Gene Munster, managing partner at Loop. And Gene, I caught you on Fast Money last night, so I want to follow up on something that's a little bit, I'll call it WBI, wonky but important. And that is this battery switch. It's not going to get all the headlines. They're going to a lithium ion phosphate battery. LFP, for whatever reason, is the acronym.
By the way, in case any of you are wondering, the reason why lithium iron phosphate batteries are called LFP is because on the periodic table, iron begins with an F. Really.
And that's going to be on the lower cost models. It could increase profitability, but decrease battery life in the cold. We know you like the numbers for the quarter. Do you like the changes they're making on the internal side?
I do. Brian, I got to say, I'm impressed with your tech savvy, your battery knowledge there. That is exactly right. Is they're trying to ride that appropriate curve around prices that drive demand. They've seen that really nice. Delivers up 73%. The auto top 5 is down 23%.
So it's worth taking a moment to let that one sink in there. Tesla deliveries year over year up over 70%, while the top 5 automakers by volume down almost 25%.
Try to ride that curve of pricing yet profitability, and margins inched higher in the quarter. Gross margins ex EV credits were 28.5%. The street was looking for 25. But how you get there, it's easy to say it. It's hard to do it. What you described with the battery piece is something that they're doing. It is small. It's unspoken, but it is important. It is a differentiator which keeps Tesla's cars priced at a competitive advantage versus this competition that we've been waiting for a long time, and it has materialized in some countries and not in others.
Well, I guess, and thank you, by the way, for that. And Gordon, I guess there's two ways to look at that, right? Which is they're trying to make the battery technology cheaper, and they're trying to maybe either increase profitability or keep prices steady or maybe decrease prices in terms of competition. I would severely doubt the second part of that is going to be Tesla's strategy going forward.
Now, if I heard right, the anchor there was just suggesting, correctly by the way, that it's very unlikely that Tesla would be lowering their prices due to competition. Spoiler alert, there is none. Nice to hear this acknowledged once again in the mainstream finance media. They are starting to wake up. I'm impressed.
The numbers were good, but you say they simply still are not good enough to justify a valuation.
Yeah, we don't think the numbers are good.
So Dingbat Johnson off to a great start. We don't think the numbers were good. Please, Gordon, tell us more.
Their revenue number missed consensus, 13.7 versus 13.9.
Now, for starters, they beat where it matters, earnings, gross margin, but let's do the math on this supposed miss on revenue anyway, just to put it in context. 13.7 divided by 13.9 equals within 1.5%. Big miss, wasn't it?
The whisper on the bottom line was $2. They came in below that. So I don't know what everybody's talking about.
Okay, so let's ignore the Wall Street consensus estimates and instead pull an imaginary whisper number out of our ass so that we can therefore say that Tesla missed the imaginary whisper number. Yeah, I don't know what Gordon is talking about.
I don't know what everybody's talking about. But we need to take a step back. Look, you need to look at what's going on here.
Quick deflection, change the subject. Masterful from Gordon, the class clown here.
Tesla in the quarter and their other segments, right? The reason why Tesla's valued at $800 billion versus $80 million for GM is because they're quote unquote more than an auto company. And their other segments, in their energy and storage segment, their gross margin was zero. They're continuing to hemorrhage money there. They're not a utility company, and their services and other, their gross margin was negative 2%. You look at what's going on, right? You got to stop looking at percentages and look at actual unit growth.
That's right. Take notes, everybody. Let's ignore the percentage growth. It doesn't matter if Tesla's growing their deliveries by 70% year over year. That is totally irrelevant. No, instead we need to focus on the unit numbers because that, of course, will suit Gordon's narrative just that little bit more.
Unit growth in the quarter was 40,000 units. Tesla sold 241,000 cars. In the second quarter, Toyota sold 2.7 million. VW sold 2.4 million. GM sold 1.7 million cars. Tesla in the third quarter sold 241,000 cars. So their unit growth is not anywhere near sufficient to match their valuation. And when you look at their market share, in China, their share has went from 23% to 11%. In Europe, their share has went from 33% to 12%, where you have real competition. And even in the U.S., where you don't have competition, their market share has went from 82% to 66% first half last year to first half this year.
As we've covered a million times before, this is a nonsensical argument. The entire EV market is growing. Every time a new vehicle is released, it's going to take away some of that theoretical share. If Tesla was the only company making electric vehicles, they would automatically have 100% market share. If somebody else introduces a new vehicle, it's no longer possible for Tesla to have 100% market share. Yet, at the same time, which is exactly what's happening, Tesla can still sell more vehicles quarter after quarter, year after year. The only people that fall for this argument are the self-hating basement-dwelling adult virgins of Tesla Q, who literally think this is a valid point.
So when you see competition come in, they're losing market share. Their unit growth is slowing significantly. We think they can get to maybe 1.5 million cars sold next year.
This guy is unbelievable. He's now making a very bullish estimate for how many vehicles Tesla might deliver next year, but now attempting to spin it into a bearish narrative. It's just bonkers.
We're going significantly beyond that, we think is going to prove difficult. And you have a plethora of competition coming in 2022. Tesla has no new cars in 2022. They pushed everything out because the 4680 battery cell structure isn't available.
Great bit of Gordon logic there. If Tesla doesn't have a new product being released next year, doesn't matter that they're ramping up 2 new factories, both with Model Y production lines. Both are going to ramp up what's going to ultimately be the world's most popular, best-selling vehicle of all time by a significant margin. Doesn't matter. They don't have any new products coming out next year. Take that, Tesla bulls.
So when you look at all that, you also consider their guiding gross margins.
Gordon, that's why they're making the changes on the battery. That's the exact point that I just tried to make. They're making that changes on the battery because it's easier to source. It is cheaper. One of the downsides may be that you might lose some range, particularly in the cold weather. But you know by now, Gordon, as well as anybody, people don't care about this stuff with Tesla. It is a cult in some ways. People who have them, they want another one. Nobody cares about valuations because they view this as Amazon back in 1996.
Can I jump in here,
but
Brian?
they're guiding margins to fall. I'm sorry, was that to me? They're guiding margins. Their CFO said...
Well, I guess Jane Munster won't be jumping in there.
Their CFO said their margins are actually going to fall. So
this is, wait for it, factually incorrect. CFO Zach Kirkhorn did not say that Tesla's margins will decrease over time, that there will be any reduction whatsoever. He did talk about some of the difficulties with supply chain, part shortages, materials costs that could impact margins, but didn't say that Tesla's margins will be declining. The real talking point about Tesla's margins is that they are beyond industry leading at almost 30% for their gross automotive margins, not including regulatory credits. This is very dishonest from Gordon to be putting words in the mouth of Tesla's CFO.
Again, to get to their valuation, they have to scale up to millions of cars sold.
Anyone want to guess what Gordon's going to be saying about Tesla and their valuation once they have scaled up to millions of vehicles sold? Let me know in the comments below.
To ramp those new factories, margins are going to fall. And by the way, their credit revenue in the third quarter was the lowest since the fourth quarter of 19. So they're not going to have that buffer. So we think there's a margin problem going forward.
I absolutely agree with Gordon Johnson on this one final point. There is a margin problem. Although, as you guys and girls can see on screen, it's not Tesla's problem.
We don't think they're Amazon, we think they're AOL.
And I think the sham shop, allegedly known as GLJ Research, is AOL. Man, I'd love to know who's paying this guy's bills. So, hope you guys and girls have enjoyed this light entertainment. It's always fun to watch The Muppet Show starring Gordon the Genius Johnson, sharing his ludicrous thoughts and his crazy hypotheses regarding Tesla and his thoughts around Tesla stock, which today, for the record, if you don't know, he has a $67 price target on. Meanwhile, if you ask this guy, as I said earlier, in my opinion, Tesla stock is going to Mars. Don't forget, you can pick up your Tesla Stock to Mars merch with the link in the description. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.